Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, we're going to talk about the best mortgage rates on the market. We've got some new lenders in this. Maybe you follow along on this channel and you've seen that on a regular basis now, we've been talking about lenders cutting mortgage rates, the interest rate that you or I pay. Now, this is down to a number of things. One, inflation is significantly down. It's in the 2% range. There was a chance, and there is a chance, that it's going to rise as this year continues, but it's not looking as bad as it potentially was. We've had the Bank of England who have cut interest rates once. We've had the Federal Reserve who have cut interest rates once as well, with a bigger cut. And the mortgage market was really quiet. So what happens in that scenario is lenders need to get more competitive. They want to fight for your business, and that's good for us. And when they do that, that means that the mortgage rate that we pay ultimately drops. Another factor is something called the SONIA swap rate, and that's what your bank, my bank, the banks that I'm going to talk to you about today, that's the interest rate that they get, that they borrow at. That's come down as well recently, allowing them more margin and that opportunity to cut rates. So we're going to jump into this, but if you haven't done already, do subscribe to the channel down there somewhere and hit that bell notification. We're on the way to 31,000 subscribers now. There's a ton of new content coming up this week, so that's what you want to get in your YouTube feed as quick as you can. And while you're here, smash like, tickle like, do something to that like button down there. That really helps with the YouTube algorithm and gets more views on the channel. So I appreciate everyone that does that. So first, we have got HMO mortgages. And if you're new to this channel, or maybe you haven't watched, maybe you're not new and you just haven't watched one of these videos, what I'm going to do for you is I'm going to go through the different categories of mortgage. So we're going to look at HMO, which is house of multiple occupancy, buy-to-let in a personal name, buy-to-let in a limited company, a residential mortgage with a big deposit, and a residential mortgage with a small deposit as well. So we can look at all the different levels in the market and what they're offering at the moment. So on HMO, house of multiple occupancy, that's where you rent out on a room-by-room basis. There isn't tons of lenders that do this. It's not like a residential mortgage. And so rates are a little higher, but they have been dropping. The best lender is still by far the Mortgage Works, and they have got a 5-year deal at 5.49%. The fees on that are 3% of the total borrowing, and they will lend you 75% loan to value of the property. So £100,000 property, they'll lend you £75,000. Now, these aren't bad rates if you consider the fact that you're making way more margin on this type of property deal because you're renting it out on a room-by-room basis. The 2-year deal they've got is 4.94%, under that 5%, which is good. That's what you want to see, more of these. They will lend you, the fees on that will be 3%, and the loan to value is 75% loan to value. Again, so if you're in an HMO or you want to potentially turn one of your properties into an HMO, the Mortgage Works is probably your best lender for that. Next, limited company mortgages. Now, this is what I recommend if you've been on this channel for a while. I've done videos on this quite a few times. Should you invest in a buy-to-let property in your personal name or limited company? Limited company is the way to do it now. If you buy any new properties, I highly recommend, even if it's just one, that you put it in a limited company. That's going to reduce your tax. It's going to make it way more cost effective for you. Landlords are getting hit really hard at the moment with tax, legislation, all this stuff. You'll still have the legislation in a limited company, but the tax is significantly better, and you can write off costs as well to reduce your tax bill. So the 5-year deal, the Mortgage Works is the best lender. Again, for both of these, they've got a 5-year deal which is under 5% now, which is good, 4.99%. The fees on that are 3%. Excuse me. And the loan to value is 75%. They do have, which isn't common for buy-to-let, they do have an actual 80% loan-to-value product if you want to pull more money out. The rate will obviously be higher on that. They've got a 2-year deal that's better on this one, and that's 4.79%. These rates are recently come down as well. 3% fees, 75% loan to value. So if you're investing in a buy-to-let, Mortgage Works is one of the better lenders. When I started out, it used to be Birmingham Midshires were always the best. Mortgage Works, which is part of Nationwide, are really, really aggressive on being really competitive in the market, which is good for us, right? Next, buy-to-let in your personal name. These rates are massively lower than the limited company, but obviously you've got more costs. So it's still better if you're investing in a new purchase to put it in a limited company. But most buy-to-lets, because buy-to-let's been around for decades, most people have it in their personal name already. So on a 5-year deal, you can get 3.79%, which is really not bad. It's not as good as it was 2 years ago, but it is significantly better than this time last year. The fees are 3%. That's obviously a sticking point for some people, but that fees spread over 5 years, so I don't think that's too bad. Loan to value, 75% loan to value, which is really, really important for landlords in this market. 2-year deals is even cheaper, 3.49%, less than 0.5%. This deal is one of the best deals in the whole market. Right, it's really, really competitive, this deal. And I'm talking about, this is one of the best deals for residential, buy-to-let, HMO, or any type of mortgage. 3.49 is down, 2% fees, which is lower than the 5-year deal, obviously because you've only got it for 2 years. And the loan-to-value is 75%. So, big lender, go and check out the Mortgage Works and speak to your broker to get the deal for you there. Nationwide. Now, this is where we're moving to residential properties now, the houses that you or I live in. And so, Nationwide, which is the Mortgage Works, interestingly enough, they are being super competitive on residential and buy-to-let. Like I said, they're really trying to dominate the mortgage market at the moment. And they're doing that in the residential market as well. So they've got a 5-year deal that's got a cracking rate of 3.89%. Remember, we were at 6.5%, 7% a year ago, this is way better. And if you were in that scenario, which I have seen in the comments, we saw someone commented the other day saying they've got an 8% interest rate. I would look at what's the penalty for leaving early, because it might be worth leaving early if you're tied in somewhere else and swapping onto one of these rates. If you've got like 6.5%, 7% rate, it'll make a big difference. So the 5-year rate, 3.89. The fees are fixed fees on this level, which is obviously good. It's not the percentage. It's 999 under £1,000, and its loan to value is 75%. So this means you need a 25% deposit or 25% equity. So this would fit most residential mortgages in the UK. The 2-year deal is 4.14. That's good. Interesting to note here, they're trying to get you on a 5-year deal because they know interest rates are going to drop in that period of time. So they want to lock you in with a better deal on the 5-year deal. You've got to decide, do you think rates are going down? Who knows? No one knows for sure. I think they likely are. So you've got to decide, do you go for 2 years or 5 years? Fees with this one are 999, loan to value 75%. So decent deal there as well. And the residential mortgages with a smaller deposit. So these are 10% deposits. 2 new lenders on here, which is great to see. And rates under 5% for both of them with a small deposit. And that indicates that these lenders are probably fairly confident that the market's not going to drop. House prices are not going to drop more than 10% in their scenario, because otherwise they wouldn't lend. They'd make you have a bigger deposit. So the 5-year deal with them is with First Direct, part of HSBC. That's 4.54%. It's a decrease. The fees are some of the lowest. Some of you guys that like lower fees, 4.90. It's getting there, isn't it? It's not cash back like we used to have back in the day, but it is much lower, half the price of everywhere else. 90% loan to value, so you can do that for a first-time buyer with a 10% deposit, or maybe you've just got a small amount of equity. The 2-year deal that they've got is with Coventry Building Society, and that's 4.90%. Fees are 999, 90% loan to value. So again, great deals under 5%. Everything's moving in the right direction. So that's the deals that we've got this week. Some of you will probably know some other deals that we should be looking at. So do comment below. Do comment below with what you're doing with your mortgage at the moment. I like to get some more engagement on the videos and conversations with you guys so I can understand, and that helps me tailor the content for you guys to pick the right types of videos to make. And if you didn't earlier, smash the like button and do check out all the other content on my channel, including this video over here. Bye for now.